Hey guys, Brian Stevens here, the National Real Estate Post, burning the midnight oil on a Friday. I hope you're having a great weekend, and I wanted to get this to you over the weekend. I had an interview with Kristopher Martin, the co-CEO of Oaktree Funding, a fantastic non-QM company. He's speaking about some exciting new products that are coming on board that can help realtor, loan officer, and client alike. Extremely competitive pricing, changes in insight to the market, not only how it pertains to non-QM, but how it pertains to real estate lending as a whole. It's a little bit of a long burn. It's like 9.5 minutes, but I'm telling you right now, as a professional full-time loan officer, you owe it to yourself to check this stuff out and see if it can help you close more deals with your realtor partners and more people in your community. Hope you enjoy it and keep having a great weekend. Catch you guys on Monday. Hey guys, Brian Stevens. I got Kristopher Martin, the co-CEO over at Oaktree Funding. How are we doing today, Chris?
Great, Brian. How are you?
I'm hanging in there. As the landscape of the mortgage space changes, are we going to see the landscape of non-QM changing as well? Is non-QM going to start to look like maybe a little bit more non-prime?
Non-prime is a word that investors don't want to hear because it rhymes with subprime. And those of us that have some gray whiskers on our face, they understand what happened and a complete lack of credit, what that does to the overall landscape. But the success that we've had in non-QM has been based on having a strong credit background. Where we're seeing the non-QM landscape changing is non-QM products blur lines with jumbo programs, and we're seeing a lot more non-QM products giving segue to small balance commercial. Not traditional small balance commercial where we're talking, $5-6 million. We're talking about 2 to 8 units, talking about the mixed use, talking about different apartment complex loans, and RTL lending, fix and flip, bridge financing, those types of things. And that is the direction that Oaktree is in, and we're in the process of expanding those products. That I see lines being blurred that way. I don't see, especially with a lot of investors projecting a recession in the near future, I don't see them lightening credit standards or really going after higher loan to values. But certainly there's room for expansion. Some are taking a gamble, but it's a higher cost. And right now we have 700 credit score borrowers, 720 credit score borrowers borrowing with 10% down. Their rates are double digits. So I don't know that that's really palatable for a lower FICO score borrower to borrow at that level and be able to afford the monthly payments in many cases.
I've just read an article recently that we're bantering around increasing capital gains on properties. We're taking it from the individual from 2 to 5 to $1 million.
Right.
We are becoming a jumbo industry. And if our agency opportunities don't increase, more and more borrowers are going to be directed towards our non-QM channels, particularly our self-employed people, which you guys do such a great job with. Can we talk about some of the changes that have taken place to the jumbo products that you guys have right now and the opportunities that it creates for both consumer, real estate agent, and loan officer?
Yeah, absolutely. We actually just released our expanded jumbo program. If you go online and you take a look at it, it allows for, so traditionally, right, in the jumbo program, you're maxed at maybe 45 debt ratio. You got to have that 720 FICO score or 760 FICO score, 740 FICO score, depending upon who you're talking about. There's no interesting features. They're trying to have them securitized. They want to be a bank product, that type of thing. But what we're seeing with the capital calls, and specifically as when I got off the plane at 2:00 in the morning on Monday, arriving here in Philadelphia, they got an alert from Bloomberg that popped up and said that the large banks are going to have to do a 20% increase in how much capital they're holding. Well, that means that they can only do that by lending less money, right? So if they're lending less money, then that means that how do you get a bank to lend less money? They can't just unilaterally deny people. That would be against equal housing opportunities and things like that. So the only thing that they can do is they can raise rates. So now that the banks aren't the cheapest game in town anymore, it's really allowed for the non-QM product to step up, features of non-QM products to step up and kind of fill the hole. So the features of the loan, we're offering a 40-year fixed option, 30-year loan fixed, 10 years interest only on the front end. So after 10 years, it goes to a 30-year fixed loan. You're qualifying off the 30-year fixed payment. You want to qualify more borrowers? How about qualify them on a 40-year fixed term? We are offering a 1 or 2 years income qualification for those borrowers, so you don't need to do the full 2 years. Minimum loan size on it's actually below the max conforming loan. It's $450,000. Loan amounts up to $3.5 million, and our max LTV currently is 80%. But it's very aggressive pricing. Like I said, interest only features, 40-year fixed features. Call one of your account executives at Oaktree today, and we can help you get started on the product.
I don't know if you saw this, but the Mortgage Bankers Association just came out and said, this is the most unaffordable market we've ever had in the history of our country. And that kind of leads me into the whole marketing component of this. The only thing that we need to be focusing on right now is how are we getting some of these people off the fence and bringing them back to the table? We've got great products out there. As you said, we have aggressive pricing on these products, which is fantastic. How do we move the bar on this? How do we get more realtors and lenders involved?
When's a great time to buy a house? It's always a great time to buy a house, right? The best time to buy a house is when interest rates are up, because there is less people that are going to be willing to buy a house. Now, what we've seen is that there's also not a whole lot of inventory right now. So when rates go back down, does that mean that there's going to be an explosion of inventory? Are people sitting on houses they don't want to be in, but they don't want to get rid of their 2% rates? We're kind of in unprecedented territories right now, but that's not going to depress the market. If interest rates come back down in the next 6 to 8, 12, 14, 18 months, whenever it is, then what's going to happen is that and people start selling their houses, those houses are going to be gobbled up. I think be gobbled up. There's nothing really depressing the home prices right now. I haven't seen an economic indicator that's going to depress the home prices. And if you want to get people off the fence, I mean, hopefully the regular listeners of the show and watchers of the show, you had great graphs on there today, and it was perfect. It talked about where the inventories are at, where things are at relative to inflation, and to your point, it's that straight up and down line. If you're living in a house and it goes down in value, and for a couple of years, it doesn't mean that it's going to lose money long term. You just stay in it for 2 more years, and it's going to recoup that money right back. So, when's a good time to buy a house? Now is a great time to buy a house, because interest rates are high. They're not going to be, the house prices aren't going to go down, and you're locking in your price of your house. You can always lower your rate. I know that it's cliche, and LOs are probably sick of hearing it at this point, but you need to encourage your borrowers to date the rate and love the house, right? So
I hope every loan officer and real estate agent who's watching this just understands that point. Like, you need to go out there and you need to message 10, 20, 30 people a day. Yep. If you did that, if you convert it at a 1% rate and you talk to 30 people a day, you're going to have a client every 3rd day, every 4th day, period.
The house price isn't going to get any lower, and the likelihood of the rate coming down is fairly high before you're going to lose money long term on a house.
Yeah.
Most people don't live in a house for 2 years. Most people live in a house for a few years. Loans last less than 3 years, right? Historically, loans last less than 3 years, but most people stay in their house much, much longer.
Let's talk about investment properties. Let's talk about fix and flips right now. People are still buying and flipping houses.
We just rolled out our brand new RTL program, residential transition lending, which is usually just meant for bridge loans, but we do short-term 12-month loans up to 85% loan to cost, and we'll finance up to 100% of the rehab cost.
Wow.
We're looking for investors. In our first issuance, we're looking for investors that have experience, but our closing time is less than can be obviously cooperative borrowers help, but in 14 days we can get the deal done. We have a whole process. We've got a deal sizer that your AE will go over with you. Your AE has been thoroughly trained through training programs and had to pass a test and get certified to be able to explain the product to you. So they're going to be, again, experts in what they're talking to you about. And you're going to be able to work with our team and get the loan closed very quickly and very efficiently.
So you will finance the improvements on the property, and I don't need to have a contractor?
So if you're the owner, you don't need a contractor's license.
All right. We got the picture of Philly behind you. Have you had a cheesesteak sandwich? But more importantly, what the heck are you doing in Philadelphia?
You know what? I do not have a cheesesteak sandwich yet. We're threatening to go do that tomorrow. I've had lots of good food while I was here. We are actually... myself and my executive vice president of sales, Mike Ernst, and I are out here getting our wholesale sales team in Philadelphia up and running. We are launching a East Coast based sales and operations center, so we can better assist brokers on the East Coast, so that we can have you guys have coverage and assistance on your time zone. Sometimes brokers don't like it when we don't come to the office until 8 o'clock in the morning, and it's already 11 o'clock in the morning their time. So we want to make sure they have support and coverage for all the loans they want to submit to us here at Oaktree.
Hey, listen, at a time when mortgage companies are going through attrition and shrinking in size and cutting back, we've got Oaktree over here who's expanding and trying to better serve their clients from coast to coast. What a novel idea in a hard market.
I'll tell you what, and these guys that we have coming on board, and I take nothing away from the team that we have in Arizona, because they're great, excellent trained highly professional individuals that we have working for us in Arizona. But these guys out here, these guys are going to give the folks in Arizona a run for their money because every single one of them sat in your shoes, Mr. Loan Officer. They were loan officers and brokers before they came here and worked with us here at Oaktree. So they know what it's like to be hammered on by a real estate agent. They know what it's like to be hammered on by a borrower. They know what it's like to be in your shoes, to go out and get business and source business and protect those referral partners. And they're going to help you close more loans, guaranteed.